Very important stock which has been in focus. That's Nestle from the FMCG space. It's been in focus on account of not only its numbers, but a lot of controversy with regards to its baby food products and the added sugar. Mangalam, you did speak to the management. So give us a perspective on this. This is our Insight Edge segment on Halftime Report. So tell us more.
So the interview was headlined obviously by the management's commentary with regards to, their the presence of sugar in their Cerelac product. A couple of insights that we got from that is, one, they are already testing a zero sugar version for India. At the same time, when I asked them that why is it that when it's available in UK and Germany, you just get it here. They said it's a function of the ingredients that go into it, the formulation, the price and all of that. So not as simplistic as we think about it. But you can rest assured that this is something that the company is working towards. More importantly, Cerelac accounts for about 20% of their sales. Wow. So that is as much as what Maggi accounted for when, the Maggi issue had happened. So this is something that we will keep an eye out on. Any sort of regulation coming in from the FSSAI on this is something we'll be watching out for. As of now, they're absolutely in line with what the law of land says.
So they're not changing anything for Cerelac?
They're not changing anything for Cerelac right now. But over the last few years, they've reduced the quantity of sugar by 30% as well. But apart from that, we have some other interesting things that they've spoken about from a company standpoint as well. The first one, of course, is to bring back volume growth. The last quarter, volume growth was a little shy of what the street was expecting. Around 3 to 4% is what the company reported. They are aspiring for 10 to 11% revenue growth with 20 to 22% margin. So that is something that the street would like. The second thing, we were talking about the JV with Dr. Reddy's here, right? They put a number to the opportunity that could be in the first 2 years itself. 1,000 to 1,500 crore business opportunity for the joint venture with Dr. Reddy's. And there is, margin accretion that they would see on account of this. When I asked them if the margins are going to come down because of raw materials, etc., would you rethink on the royalty increase that, has been agreed to pay the parent? They said no rollback on that. But the new businesses, pet care, which is coming in from the parent, you have Nespresso, all of these are margin accretive. So they would more than make up for the increase in royalty. And then for all of us coffee lovers, would they compromise on the Nespresso quality and will they make it affordable? They said no, they won't compromise on the quality and it will be competitively priced for the Indian market itself. So let's actually listen into what Suresh Narayan had to say to us beyond all things sugar in their infant nutrition business, on business and the opportunities there.
The way I always suggested investors to look at Nestle India is to look at us in a band of growth, which is 10 to 11%, and a band of operating margins between 20 and 22%. I think the environment around us is too volatile for us to have definitive predictions on where we will land each quarter. Some quarters will be a little bit longer, some quarters will be a little bit shorter. But on average, if you measure the operating margin of the company, it will be between the 20 and 22% levels. This business should at least be, in combined terms, 1,500 ton business, 1,500 crore business in the next couple of years. So that's the expectation that we have got. I think Dr. Reddy's brings the channel heft. I think a great deal of experience, expertise, and wisdom in the pharma space. Some very strong brands as well. Nestle has also got a strong roster of brands and competence in consumer-led marketing, which is something that Dr. Reddy's would also find useful for itself. The first 5 years will be a lot of seeding activity. So it will not be revenue that will be significant to move the needle as far as the company is concerned. There is no question of any compromise on quality. We don't do it. And there is no question of any compromise on the premium most coffee that we have got. The imports will be from Switzerland. Switzerland is the main source for Nespresso capsules. And the machines as well will come from Switzerland. The pricing will be competitive. I don't think there is any need for us to look beyond our nose to see that there are capsules coming in from Dubai, coming in from Singapore, coming in from the organized trade and from the grey market as well. So I think we are in business to be in business, and appropriate pricing will be worked through.
All right, so interesting insight coming in from the management of Nestle on things beyond added sugar in their infant nutrition business. most excited about the way the joint ventures with Dr. Reddy's, Nespresso, and also the pet care business comes out. But from FMCG, let's move on to IT.